All right, hello everybody. So upon popular request, I am finally making my how to invest in the stock market video. This is like a master class that I'm showing you, sharing with you, and explaining it to you in a way you've never heard before. I'm not a financial advisor, it's not a financial advice, but this is going to give you a good understanding of how to invest in the stock market. So if you're not yet investing, this is going to be a good start. If you are already investing and you're not getting the returns that you're looking for, I'm going to be showing you exactly what you're doing wrong. And so just to begin, I am a long-term investor, right? I buy and hold companies for years to come. I'm not a day trader, option trader, anything like that. I'm going to be showing you, what I prefer, how I prefer to invest, okay? So the mindset of an investor is one of the most important things to have, the proper mindset, right? Because the thing that you have to understand is, for example, right, let's say I started to invest in the stock market right now. I'm 28 and I started my first job at, let's say, 18. So for 10 years, I had this employee mindset of a 9 to 5, right? That mindset is ingrained into me, okay? And so the employee mindset versus an investor mindset is at a different level. You have to think differently. You have to view things differently. So as an investor, right, you're taking your money, you're investing it into what? Companies. You're not investing into a stock. You're not investing into a piece of stock that's $52. No, you are investing into a company, their company, the team, okay? So the mindset of an investor is that you are in the business to own businesses, pieces of businesses. Okay, that's the mindset that you should have. So when you are owning pieces of businesses, what is it that is important for you to know? The business, right? Because the way I want you to be thinking about this is, let's say your friend came up to you and your friend said, hey, can I, get a loan for $10,000 from you because I want to start a restaurant, right? And so would you say, yeah, I knew you since childhood, here's $10,000. Is that what you would do? No, I mean, what would you want to know about your friend's business, right? You're risking $10,000 into something where you're not even sure of, right? You would want to know everything, right? What is the business plan? What type of food? What's the marketing plan? What's the revenue plan? Like, where's the location? You would want to go down the list to be as certain as possible that your $10,000 was going to be put into a good use, right? I would hope so, right? And so with just like that, you would want to know everything about your friend's business. That is what you need to know in regards to the companies you are invested into. One of the biggest mistakes that I've seen hundreds of people make out there is they stay too surface level, right? So for example, Disney. Oh yeah, I know Disney. Disney has parks and Disney has Disney Plus and they're going to do really well, right? And they say, okay, I'm going to put some money in Disney, right? But hey, do you know who the CEO of Disney is? No. Okay, and think about your portfolio right now for you that's watching. The companies that you have invested, name all the CEOs of those companies. Why don't you know, right? I mean, everybody knows the trillion-dollar market cap companies, the billion-dollar market cap companies, CEOs, but why don't you know the CEOs of the companies you're invested into? If I want to give $10,000 to my friend, I would want to know his full freaking name, right? I would want to know at least his name and phone number, right? To give $10,000 to a complete stranger where I don't even know their name, that's foolish of me, okay? So going back into it, the grind of an investor is understanding companies at the highest level possible. This is the day-to-day grind. It's not, oh, I'm going to Uber, I'm going to do a job and work 60 hours a week so I can put more money in the stock market. No, that is a employee mindset. The investor mindset is understanding companies at the highest level possible. Day in and day out, hours of research, months, years are going to go into this process. Reading, researching, watching interviews. That is the grind of an investor. Okay, so shift that mindset. Okay, so where do you begin? How do you gain the level of confidence that you need when you are investing $10,000 of your money into a company. Okay, so where to start is any publicly traded companies out there, they have what's called a investor relations page. So you can go to Google, type in any company name and then investor relations. So Apple, Disney, Coca-Cola, every website looks a little bit different, but some of the information is consistent throughout. So for example, what you're looking for is the SEC filing, Securities Exchange Commission filing, right? Every company legally that's publicly traded has to report, right, in GAAP accounting principles, what they're doing in terms of how much they're making, how much they're losing, everything to be as transparent as possible for the investors to see, right? So you're looking for the annual report, right, quarterly report, and you want to be participating on the webcast. So 10K, 10Q, and the conference calls. Okay, so within the 10K, the 10K is going to give you everything you would want to know about the business, right? What the business is, the risk factors, liabilities, legals, accountings, you know, how much they're making, cash flow, etc. Like, it's going to give you everything you would possibly want to know about the business. So for example, you know, I love Disney. I've read through Disney's 10K. Most people think it's okay, Disney, it's just parks and, you know, Disney Plus, but there's more to that, right? They own Star Wars, Fox, ABC, ESPN. They own, I think, like 25% of A&E. Because they own 25% of A&E, they also own a bit of Viceland. They also have a good portion of their of money in DraftKings as an investment. They have National Geographic. They have bunch of TV networks. They have, you know, bunch of, like, I forgot exactly all of them, but they have a bunch of other networks within their umbrella, right? You think they make a lot of money on parks? No, they make majority of their money on advertisements, right? So it's understanding that. It's not just understanding the surface level of your friend, of your company you're invested into, but it's going into deeper levels, understanding the company at a big overview, as if you were the CEO, as if you ran the company, right? You want to understand it at the highest level possible, even the risk factors, right? What if this happens? What if that happens? Like, within the 10K, they're going to tell you what they are concerned about, right? Within the risk factors section. And so quarterly reports are every 3 months. They're coming out with the report, 10Q, and they're going to be updating you on their progress, as well as the webcast, the conference calls. This is where the CEO, CFO, OO, whoever O is going to come on and answer any questions that analysts, investors, whatever have, right? So think about it like this. You are interviewing the company to see if they deserve your time, right? You are interviewing companies to see if they deserve your capital, your investment, your money, your time into analyzing their company. This is the foundation of where you should be beginning from the very start. Instead of putting money right away, this is the process that you should be doing before making any type of investment, right? Because when you understand companies, when you're interviewing companies, right, you're able to make your own decision as to, okay, is there an opportunity with this company? Because in the webcast and based on different projections, they're saying they're trying to grow at 10%, next quarter, 5% CAGR, or 10% CAGR, 20% CAGR, whatever the case may be, are they executing? Do they have a history of executing what they have said they're going to do, right? And you're able to see all these numbers when you do your research, basic research here, right? To build up the level of conviction that you need to put your money into that company, right? But you might be thinking like, oh, I'm just going to watch, some YouTube videos or read some articles on, summarized of the 10K, and, I'm going to be making my investment decisions that way. Okay, sure. You can do whatever you want, but here's the thing. Let's say you have, 10K or let's say 100K invested in the stock market. Do you want a summarized article understanding of what you are invested into, of your 100K investment? Or do you want to have a complete understanding of what you're invested into. Oh, Yoon, I'm just going to watch somebody else's YouTube video who's done that research for me. Okay. Do you want somebody else's opinion influencing your 100K investment? Or do you want to have your own 100K investment conviction? Oh, Yoon, I'm not going to be influenced. I'm just going to, do X, Y, and Z or, whatever. Like at the end of the day, it's up to you. But if you are relying on other people, the other people aren't going to be around forever. YouTubers aren't going to be making YouTube videos forever, right? They make mistakes too. Sometimes they have a lot of money. They can afford to make mistakes. But what about you? Can you afford to make a $100,000 mistake? Can you afford to make a $10,000 mistake? You can't answer that question. So it's important for you to do the research process on your own, right? And this is the foundation, okay? And then we can move on to the next part. When you do the foundational research, you're going to have an idea of, okay, this company has potential, right? It has potential because it's got X, Y, and Z factors going for them, right? And that is you developing your bullish thesis. Now you have an idea, okay, there is an opportunity here. And maybe you do this process, maybe the company you're thinking about investing into is not that attractive and you just move on, right? You don't have to invest into every single company you do the research process for. And so once you find a company you like, right, you develop a bullish thesis, and think about it like when you're in school, high school, elementary school, middle school, high school, we've all done it. When we write English papers, right, what you're trying to do is you are trying to prove some type of point, right? So when you're writing your paper, right, there's a topic, I believe in X, Y, and Z, and then you begin, right, with your points, and you start to do further research, go into different sources, books, interviews, articles, videos, etc., to prove your point, right? And this is going to give you the level of conviction you need, right, to invest $10,000 into a business, $100,000 into a business, into a company, into a team, management, right? Because at the end of the day, what you are invested into, and this is going back to the employee mindset versus investor mindset. Employee mindset is, okay, I'm going to invest it here at $50 and it's going to go up to $75 and I'm going to sell it. No. Investor mindset is, okay, Disney is led by Bob Chapek. Bob Chapek is an internal hire within the CEO. It's an internal hire. He was running the parks and recreation. He was the head of parks, and they internally promoted him. They didn't bring new blood from the outside in. They hired internally, and it's funny because the previous CEO was Robert Iger, Bob Iger, and it's Bob Chapek. They're both Bobs. And like, okay, how many interviews are there with Bob Chapek? What's his mission? What's his vision? Like, what is he trying to focus on? What's Robert Iger doing? Robert Iger is, focusing on this. Okay, now you start flowing. You start understanding, right? What you are invested into is not the price of the company. What you are invested into is the team, is the management, is the business, it's the opportunity. That's the investor mindset, right? Because for the stock price to go up, the company has to perform. For the company to perform, the people within the company that's running the company has to perform. So how important is it for you to understand the people within the company? It's very important. How important is the company culture? What's the company culture like? What are they trying to do to improve that company culture, right? And so that is the research process. That is the mindset of an employee versus an investor. I want you to be adapting the investor mindset. And so at the end of the day, what it kind of comes down to is your risk factor. When you are beginning or thinking about investing in the stock market, it's the risk factor. There's different types of market caps. If we Google, like, for example, like Disney, DIS stock or Apple stock or Microsoft stock, Google is going to show you a little chart. Under the chart, there's a bunch of information, right? And one of them is market cap. And so higher the market cap, lower your returns typically, smaller the market cap, higher the potential return. And so let me explain. So when you are investing in the stock market, right? Like I said, don't be focusing on the price. It's not about the price. It's not about $50 going to $75. It's about the market cap. If a company is at a $1 billion market cap valuation as the company as a whole, and they get into they're trying to grow into, let's say in the future, they can see themselves being a $100 billion valuation, so 100x what they're currently worth. Now you want to prove, right, within this process, okay, what do they need to do? What does the management team need to do to deserve to grow into that valuation? Because when a $1 billion market cap company grows into a $100 billion market cap company, they're essentially were able to 100x, right, their valuation. Meaning if you have $10 into a company that's worth $1 billion right now, it's going to become $10,000 down the road, okay? And so that's why, right, sometimes small caps, mid caps are more attractive, but at the same time, the risk is higher because you need to do a lot more research, a lot thorough research. There's less information out there in regarding those companies, right? And so large cap, for example, if you're going from 100 billion to 200 billion dollar market cap, which is, large cap's already pretty established. If they were valued at $100 billion market cap, they're pretty established. To go into a $200 billion market cap, they've been able to essentially 2x, right? So if you have $10, now it's $20. And then if it's a $1 trillion market cap, this year we really saw the rise of $1 trillion market cap companies. If they were at a $1 trillion market cap and they grow into 1.5 trillion, so $500 billion added into their market cap, right? You've been able to 1.5 times your money. So if you have $10 in there, now it's $15, right? So the way I want you to be thinking about this is higher the market cap, the more established it is. You probably know these companies, right? Apple, Disney, not Disney. Disney is more like the mega cap, large cap. $1 trillion is like the Microsofts, the Amazons, the Apples, etc. So everybody knows about the $1 trillion market cap companies, right? They're very established. The lower you go in this totem pole, the less you are aware that this company exists. The less you are aware that this company exists, the less information is available to you out there for you to make a high conviction decision on whether or not this is a good investment. So that's why it's riskier, right, compared to companies like this, right? We already know Apple, right? Apple's not going to go anywhere anytime soon, okay? But smaller companies that are just starting up, that only are at $300 million valuation, they're at a bigger risk because of competition, right? And so that is kind of it for today, at least. If this was helpful, let me know. If you want to see, something similar again in the future, let me know. If you have any questions, let me know. So the biggest thing that I want you to understand is start changing how you are viewing investing in the stock market. Change your mindset from an employee to an investor, right? From looking at the stock price to looking at the company, the team, the management as a whole, okay? That's the big mindset shift I want you to have. So hope you enjoyed. Thanks for watching. See ya.